Welcome to your guide to assumed pensionable pay in 20 easy steps. Whether you're a seasoned pensions professional looking for a refresher, or you're new in the post and want to know more, we've produced this comprehensive video to help you to better understand and calculate assumed pensionable pay, APP. This video is split into a number of sections. Depending on your familiarity with APP, you can choose to watch the whole video or skip to the parts which are of most interest to you. The timecodes against the sections help to identify each appropriate starting point. What is APP? APP protects an employee if they're absent from work for any of the following reasons: sickness or injury, relevant child-related leave, or reserve forces leave. APP makes sure that an employee's pension builds up while they're absent, as if they were at work receiving their normal pay. APP replaced the concept of notional or as-was pay when a member moves to reduced contractual pay or no pay through any one of the absences mentioned earlier. Whilst employee contributions during the period that APP is applied are based on what the employee is actually paid, employer contributions are paid based on the APP. As an LGPS employer, you must calculate the APP for a member's period of absence and report this correctly to the Cheshire Pension Fund. When does APP apply? As mentioned, APP applies if the employee goes on to reduce contractual pay or no pay as a result of sickness or injury, child-related leave, ordinary maternity, paternity, and adoption leave. A period of paid additional maternity, adoption leave, or shared parental leave being on reserve forces special leave, if the member has elected to remain in the LGPS rather than contribute to the Armed Forces Pension Scheme, retires on ill health grounds, or dies in service. When does APP not apply? APP doesn't apply in certain circumstances. These are during any part of relevant child-related leave, during which the pensionable pay received is greater than the assumed pensionable pay for that part of the leave period. On those days, both the employee and employer pay contributions on the actual pensionable pay received. During any period of unpaid leave, additional maternity, paternity, parental bereavement leave, adoption leave, or shared parental leave available at the end of relevant child-related leave. This is to be treated as an unpaid leave of absence, and the member will have the option to purchase the lost pension for the absence via an additional pension contribution, APC. Periods of unauthorised absence. These are treated as unpaid leave of absence. Absence due to industrial action. Any circumstance where the actual pensionable pay received happens to be higher than the APP. For example, a keep in touch, KIT, day. How is APP calculated? APP is calculated as an annual rate, then applied to the relevant period as a proportion of the annual rate. The relevant period starts on the date the employee drops to reduced or no contractual pay due to sickness or injury, or when relevant child-related leave or reserve forces service leave commences, as outlined earlier. Employers can use one of the two methods to calculate APP: average pay or current pay. Average pay. Average pay is the last 3 full months' pay, including any regular additional payments, but removing any one-off lump sum or non-regular payments, and uprating the figure to a full year. The employer has the discretion to add back into the APP one-off or annual lump sum payments if they expect the APP to continue until the next time when such payments would be due. Current pay. Current pay can be used if you consider the average pay figure to be lower than the pay the member would have received had they been at work. Here's an example. APP is calculated at an annual rate based on the pensionable pay received in the 3 complete months, or 12 weeks if weekly paid, before the start of the applicable period. Month 1, equals £1,400. Month 2 equals £2,500, including £1,000 regular bonus and £100 overtime. Month 3 equals £1,400. Annual rate of APP equals £1,400 plus £1,500 plus £1,400 divided by 3 times 12 equals £17,200. The annual figure is then apportioned to the applicable period and replaces any pay received.
Ignore any lump sum payments made.
Exceptions. There may be occasions where once APP has been calculated, in your opinion, it's materially lower than the actual level of pensionable pay your employee would normally receive had they been at work. In these circumstances, you can substitute a higher level of pensionable pay than the APP value to reflect the level of pay the employee would normally have received. In coming to this decision, you must consider the pensionable pay received by the employee in the previous 12 months. If your employee has not received any pensionable pay in the previous 12 months, this doesn't prevent you from deciding to substitute a higher level of pensionable pay. Proportioning. The same method should be used for proportioning APP as for part periods of pensionable pay. Therefore, you should use whatever method you would normally use to calculate one day's pay from an annual rate. For example, annual rate divided by 365 multiplied by the number of days, etc. Regular lump sums. Any regular lump sum payment paid in the 12 months before the start of the APP period must be added to the annual APP figure. There is no requirement for you to assess how long the APP period is likely to last, nor the likelihood that the lump sum would have been paid during that period. Separate employments. The calculation of APP uses the 3 most recent months, or 12 most recent weeks, in which the employee received pensionable pay relating to that employment before the reduced or no pay period. If, during the 3 months, or 12-week period, used to calculate the APP, the employee ceases one employment and is re-employed on a new contract of employment, the calculation of the value of the APP is based on the pensionable pay received in the new employment only, using the number of complete weeks or months available in the employment. Ill health pension or death in service. You will need to calculate and provide the APP for any ill health retirements, including Tier 1, Tier 2 and Tier 3, and for any death in service cases. The APP figure is calculated in the normal way, but using the average of the pensionable pay for the 12 weekly or 3 monthly complete pay periods prior to the date of retirement or death, including any APP credited in and relating to those pay periods. Any regular lump sums paid in the 12 months prior to the date of retirement or death can be added back into the annual rate of APP if you determine there's a reasonable expectation it would again have been paid to the employee. This APP figure is needed to calculate the amount of the enhancement to the benefits and any death grant due under the LGPS. If an independent registered medical practitioner, IRMP, certifies that there has been a reduction in contractual hours during the relevant pay periods, wholly or partly because of a condition that caused or contributed to the ill health retirement, then the APP figure is to be calculated on the pay the member would have received during this time, treated as if they had not been working reduced contractual hours. APP for maternity or adoption leave. For the first 26 weeks of maternity or adoption leave, APP should be applied even if the employee is receiving no pay. For weeks 27 to 39, APP should be applied when an employee is on paid additional maternity or adoption leave. However, if the employee is receiving no pay whilst on the additional maternity or adoption leave, then APP does not apply. APP for sick leave. APP should be applied when the employee is off sick, even when they're not receiving any pay. Do bear in mind that if you do have an employee off sick for some time, there is a chance that the APP annual rate needs to be increased with the cost of living. The annual APP rate should be adjusted if the reduced pay absence continues for a period that crosses two 31st of March dates. If an employee is on long-term sick leave, APP is adjusted at midnight on the 2nd 31st of March following the date APP commenced. We've put together a handy table which details how APP is applied based on the particular type of leave. How does APP work with 50/50? Should an employee decide that they can't afford to make the full contribution to the scheme with LGPS, there's an option to pay less contributions, known as 50/50. With 50/50, an employee will pay half the normal contributions and build up half the normal pension during the time the reduced contributions are being paid. With regards to APP, if your employee was in the 50/50 section prior to dropping to no contractual pay because of sickness, they should be returned to the main section from the beginning of the next pay period, provided that they're still on no pay at the time. If the employee has a period of authorised unpaid leave of absence, or is absent due to industrial action, APP should not be added to the pensionable pay cumulative for that period of absence. Adjusting the APP figure. Once set, APP is not subsequently adjusted unless it continues for a period that crosses two 31st of March dates. Where an employee is, for example, on long-term sick leave, APP is adjusted at midnight on the 2nd 31st of March following the date APP commenced. The adjustment is the percentage adjustment specified in the HM Treasury re-evaluation order for that second scheme year ending on the 31st of March. If the relevant period continues for a further year, it will be revalued again at midnight on the next 31st, and so on. Ending the APP accrual. APP ceases to accrue when your employee returns to work and subsequently goes back to receiving full pay. This refers to return from the following: a period of sickness or injury, absence on relevant child-related leave, or on ceasing their reserve forces service leave. Additional pension contributions, APC. If the employee wishes to purchase lost pension for an absence, they'll need to complete an application via the Additional Pension Contributions, APC, calculator on the LGPS members website. Provided the employee elects, within 30 days of returning from the authorised leave of absence to do so, the cost of the APC contract will be split 1/3 employee and 2/3 employer. If they elect after the 30-day period, the cost of the APC contract will be at full cost to the employee. The employer has the discretion to decide when the 30-day period starts. For practical reasons, it may be easier to start the 30 days deadline from the date of the employer's notification to the employee. Contributions and absences. Employee contributions and APP. When APP applies, employee contributions should be taken on the actual pay the employee receives during the period. The only exception is if an employee is on reserve forces leave and they choose to remain a member of the LGPS. Employer contributions and APP. The employer contributions are based on the APP figure which applies for the period. When an employee is on reserve forces leave, the employer contributions will be paid by the Ministry of Defence. How do I report assumed pensionable pay to the pension fund? Once you've calculated an employee's APP figure, you'll need to report this to us either as an annual, monthly, or an apportioned amount. When you're providing a leaver form, you'll need to report the employee's cumulative main section earnings figure. You should report this figure to us in the career average pay or Assume Pensionable Pay field, e.g. actual earnings, if applicable, plus APP equals career average pay or Assume Pensionable Pay. When returning monthly interfacing files to the fund, the employee's actual earnings, if applicable, and APP should be reported in column AA, Main Section Pensionable Pay, of the MI template. And finally, more information. We hope you found this video useful, and if you want to know more about Assume Pensionable Pay, you can visit the relevant pages of the Employer section of the dedicated website at www.cheshirepensionfund.org. The LGA has published bite-sized training modules to help you with APP, and comprehensive guidance can also be found in the LGA Payroll Guidance Notes.